Alright, this is Sean for Strategic to Tactical. It's the 23rd of August, Saturday. Um, just going to go over the overall market review uh, for the week and what to expect potentially for next week. So I'll start off, obviously I'll go over the S&P 500, NASDAQ, and the Russell like I've done last week. And I'll also go over junk bond index. Just something was just interesting to see that, as that's been pretty volatile here the last couple weeks as well. So anyway, with that, blabbering any longer here, let me just go right into the S&P 500. Obviously a pretty impressive bounce off these lows here. You know, if you listen to some of the videos I've talked about in the past, back in here we had these bullish market extreme indicator, and really all this was telling me is, this run may be overdone, and then it's up to me now to screen for stocks that are holding up relatively strong. Now, to caveat that, I mean, I can get an indicator like this, and then if I don't find any stocks that are relatively strong, this may be the false indicator, right? But in this case, it actually worked out quite well. There were a lot of stocks holding up strong, and there were a lot of stocks that, especially once this bounce, began, stocks were breaking new highs. A stock like LinkedIn is a perfect example. I mean, you look at that, it's an unbelievable run, but there's plenty of those type of stocks out there. So, that being said, obviously, 2020 hindsight is always is usually obvious, but we just play the risk reward. That's the way I like to play it. So. After a run like this, and in the last couple of days that I have made a quick video, I'm like, hey, the risk reward on the buy side is not so great anymore, especially after a run like this. And it definitely on Friday I confirmed. Now here I had the bullish market extreme indicator on Friday triggered a bearish market extreme indicator. Now that being said, again, that doesn't mean, hey, blindly short the market or we're going back down here. It just tells me, hey, things are a little bit overdone here on the on the upside. Again, doesn't mean that we don't go higher or whatever. Just again, risk reward, not a good spot to be buying here. So you can see, this is the McClellan oscillator. It's actually come off a little bit off these upper bands, which is actually very constructive, I think, especially for potentially looking for, if this gets back down to a more neutral area. Basically, it's like adding gasoline to your tank to potentially make another run. The only issue here is this is the VIX RSI, and that's still way down below these bands. Again, somewhat overdone potential here in the short term. So going into next week, obviously the highs on Thursday with the all-time highs, that's going to be the big resistance going into next week. And as far as support, we may have some air down here. This is the 8-day way down here. This is the 21-day down here. Again, I'm not saying necessarily calling, hey, we're going right to the 8-day on Monday or whatnot, but it would be nice, especially for the bulls, to even see that the moving averages play some catch up, the market consolidates, these oscillators get back into more neutral areas, and again, the key that I'll be looking for, because I kind of believe that after a run like this, it's tough to be a short. I mean, here the shorts, the bears got beat again, and I don't think they're going to be coming out anytime soon, potentially to try another shot here. So I think bulls are definitely, now obviously in pretty in good control here, and have the ability to maybe let the market come in a little bit, and bid for some stock at some support levels. Again, 8 days going to be big. Would be some big support levels. I drew some Fibonacci levels here from the low on the 7th of August to Thursday's high. 23.6% is 1973 in the S&P cash, 38.2% 1960. So they're way down here. So I'm not necessarily saying we're going here, but these are just some levels to keep in mind. The real ultra short-term level is going to be Friday's low, and I think that if they are able to punch through that, you may get a little bit of again, a day down or 2 days down, it may actually be constructive, because that gives you the opportunity to say, all right, which stocks, again, when I'm looking to potentially, we get a dip in here and the market wants to make another move, I want to look for stocks that are holding up in this type of dip pattern. Again, that actually allows for more opportunity, not less. And if you're real aggressive, you may want to, at least in the short term, hey, I'm going to short below Friday's low. Another strategy is, maybe selling some short, weekly calls, because then at least you have some potential time premium to will add to the decay. And if you have to buy them back, even if the market does start to push higher here, some of that time decay may have worked in your favor. So, but that's the S&P. Nasdaq looks, pretty similar, except that it obviously has been the stronger sector, and that's basically what has led us here, into this up move. Again, I've had this market extreme indicator for the last couple days, and it's actually been relatively weaker than the S&P since this market extreme indicator kicked in. As you can see, the relative strength down here, we had the market extreme kick in, the bearish one on the 19th, which is a Tuesday, and then starting on Wednesday, Thursday, Friday, the Nasdaq has been overall weaker than the broader market. But still higher, which again I think is ultimately a bullish deal. But in here, I think that the key support level is going to be these highs in here. And this is the Nasdaq Composite, so we're talking 44.86, somewhere in that area should be like a definitely key line in the sand on the support side. We have some support here. Thursday's low 45.13ish. So these are just some short-term levels to look, looking for some support. Here's the VIX this is the VIXN RSI. So this is a Nasdaq VIX. Again, it's just like the S&P VIX way down here. Like to see that get that oscillator get back more into the neutral territory before we can see another move to the highs. So that's the Nasdaq. The Russell still playing catch up to all the other indices. The bears are really hanging their head on this, hanging their hat on this one. Oh, look at the Russell, look at the Russell. I've said before, the market cap of this index is really kind of negligible, to be honest. But it is something that it has been talked about. So. The nice thing here on the bull side is it's broken this downward channel. Now we have this little uptrend that that we can work with here. It's above the 8 and 21 day, so it's building a bit of constructive action here. It's stalled right here at that 50% from this high to this low, so. We'll see that the key is going to be last week's high of this is the Russell ETF, so it's like 116 level is going to be kind of a key, and support should be Thursday's low, which is roughly 113.75 level. So, but that's that. I also wanted to go over the junk bond ETF here. This is JNK. So actually what I wanted to do is put this side by side with the S&P, if I can do that, because I just wanted to show you that the junk bond index actually has been leading both the downside and the upside in this market. So if we take a look at let's see, let's clean this up a little bit. Apologize for that. So if we take a look here at both these indices, and I'm going to do this right here. All right, so if you look at, let's take a look at the S&P here, where on this day, which was the 31st July, where things really got ugly, and this is the day after the Fed blowout day. And if you see already, the junk bond index really took a hit on Fed day, and then just continued the lower the following day. And I think that's what, in a way, the junk bond index seems to be a day or two ahead of the equities here. Bottomed out on the 1st of August, whereas the equities didn't bottom out until the 7th of August. In which case, right here, the junk bond index has already bounced pretty good off the lows, and then actually kind of is a pretty hard rally back up here. This is something that I'll keep an eye on. The junk index, like I said, it seems to be a couple days ahead of the equities. Somebody told me, hey, you want to know what is going to happen in the stock market? Take a look at the bond market and bonds in general. He kind of told me that all the smarter analysts are usually in the fixed income world. So. Again, if I remember correctly, he's a fixed income guy, so take that with a grain of salt. But in this case, it seems like potentially, at least here, this is something that I think I'm going to definitely keep an eye out going into the week. As you can tell, right now they're kind of in lockstep. So I don't know if it'll continue to lead, but it's something to keep an eye on here. And again, pretty good move, just like equities. So anyway, that's all I got. I will do a video on some stocks, tactical setups I'm looking at going into the week. And thanks for watching.